Hello, everybody. My name's Don Smith. I'm with SSI Consulting, and I'm here today with Bernie Casey, our financial expert, and we're going to be talking about cash flow issues as it relates to COVID-19 and restarting businesses. So, hello, Bernie.
Hi, Don. How are you?
I'm doing great, thanks. So, Bernie, we've been hearing from businesses that one of the biggest challenges they face right now is all around, well, restarting their businesses, obviously, but specifically around cash flows. And so I'm just wondering, what are your thoughts in terms of restarting a business and dealing with cash flow issues?
Well, cash flow is an interesting topic. It correlates to profitability. Profitability and cash flow kind of work hand in hand.
Mm-hmm.
When you have profitability for a period of time, you build your cash flow. So obviously, if you're starting for a second time, the business has been running for a period of time, and now it's had a stoppage, and now it's going to start again. Do you have enough working capital to buy the materials or the labor to get production going again? And of course, it depends on the type of business, whether it's retail or wholesale, distribution, manufacturing. They all have different equations for cash flow. Cash flow is an immediate requirement and a constant requirement. Cash flow will put you out of business faster than profitability. You could be unprofitable for a period of time, but you can't have negative cash flow for a long period of time unless you can fund it. So it's vital.
So when we were talking earlier, you had mentioned about the need for businesses, especially the smaller businesses, to track their cash flow diligently. And you had suggested perhaps even on a daily basis.
Well, the advantage of that is if you can boil it down to your daily net cash position. In other words, what amount of cash do I have today? If you track that every single day, you build a trend line, so you know whether it's improving or getting worse. Sometimes it's hard to remember these things over time. So the best way to do it, and it may also be cyclical, in a week or in a month or even in a season. So you'll be able to see those trends and kind of respond to those trends by taking various actions. As I mentioned to you in our earlier discussion, the cash flow exercise is really to plot ahead using some sort of a chart, any type of chart, where you actually take the calendar and move it forward for a period of time, usually a billing cycle plus maybe 30 days, and you write down when bills are due, and you might declare a due date on your own. If, let's say, you get a supplier's invoice today for $5,000, you might decide you want to pay $2,500 45 days from now, and another 45, and the remainder a little farther out than that. Well, those numbers can be plugged into your plan, and so on the expense side, you plug your expenses in as you see they're required to be paid in order to keep things going. You don't want to have stoppages, and you might also plan it so that a week when you have payroll, you have a lighter payment schedule to other suppliers and so on, because you're trying to preserve cash for payroll purposes. So this planning process on the payable side is very important. Also, when your remittances are due and so on, you might allow space in your cash flow for that, because those payments are fairly urgent. Government requires their money, right?
Right.
So the idea of scheduling these things is a good exercise, and you also match it with incoming funds. Now, the exercise is take it a step further. You have to work the plan. You have to say, how can I spread my payables out farther? How can I bring in my receivables sooner? And that requires some diligence. You have to get on the phone. You have to work with your suppliers. You have to make arrangements. They're very flexible and willing if you take the initiative and work with them and stretch that cash out to the maximum.
So, well, that's all good information. Do you have any closing thoughts that you want to just leave people with?
Well, I think the idea of clumping your invoices is a good idea. In other words, you might see a month and you'd say, I need a certain number of bills around the first of the month, another bunch that I'll pay around the 15th, and another bunch maybe around the 24th or something like that, like or the 1st, the 10th, and the 20th. And that way you spread the load again, because cash flow is such that when you have a large lump that you can't manage, that's when you run into trouble. And you have to work with your bank too. You know that bank loan that's available from the government? I think it's called Canadian Emergency Business Account, a $40,000 potential loan that you could take. I think all the banks have this available to them from due to the federal initiative, government initiative. And you only have to pay back $30,000 if you pay it back by December 31st, 2022. So if you decide you want this money to build your cash flow, you have to make sure that you made a payment schedule such that you're going to pay this money back. And you'd only have to pay back 30,000 out of 40, and it's interest free. So it's a pretty good deal, really, if you can manage it. That's if you need it.
All right, Bernie. Well, I guess that's our time for today, but thank you very much. I personally thought this was very good information. And for our viewers out there, I would suggest that if you do have any questions for Bernie or any of our other consultants, by all means, submit them below in the comment section, and we monitor that, and we'll be happy to respond. So everybody, be safe. Thanks, Bernie.